Hello, everybody, and thank you for joining in for this webinar today. We appreciate your time. This is Abhiraj, and I'd like to take you through today's session, and hopefully we'll be able to cover some important and key areas in terms of the topic of today's discussion, which is about next generation insurance websites and portals. Today's session is in continuation to an earlier discussion we had with a number of insurance firms, and that discussion was focused on increasing acquisition on insurance websites. And we discussed some best practices, we discussed some tips and strategies, and we also covered a few key learnings and takeaways of what could possibly enhance acquisition on insurance websites. Today we're going to be talking about two very important aspects in the customer marketing life cycle, and those aspects are engagement and retention of customers and prospects. So in the first part, just as a quick refresher, what we covered was we looked at a number of insurance websites in the industry, and we talked about a few areas of opportunity and opportunities around enhancing website presence, website features, around usability, around making user journeys and goals, and so on and so forth. And all these areas of opportunity contribute immensely to the acquisition strategy overall. We also looked at elements like your content and how it can play a big role in terms of acquisition. We looked at other factors like roping in more demand using search engine optimization, the use of microsites towards generating more demand and more focused demand around your products, the importance of other tactics like online video streaming and multi-channel engagement. And finally, we also looked at some digital technologies that enable acquisition. Today what we're going to be talking about is how we take up the thread from where we left at acquisition and talk about taking the prospect after acquisition towards better engagement, and then hopefully, after converting that prospect into a customer, we talk about how we can retain that customer. More and more insurance today is being brought by customers, and the factor of selling to a customer is being quietly and rapidly replaced by the fact that it's very much the customer that really is coming to you and is looking at what you have to offer. That being said, there are a number of ways in which better engagement can benefit a number of key segments in the customer marketing lifecycle. And we have listed a few here for you. Obviously, we're talking about some existing customers, your product or policy holders. You're talking about prospects who are at some stage of their decision-making or buying life cycle and can really benefit if they are engaged better with you. We're talking about your channel, which is your partners, your agents, and your distributors, and how engagement can actually enable them to sell and distribute your products better, which eventually leads to more revenue and more efficiencies in your sales process. And then we'll also talk about carriers, who are an important part of the overall chain in the insurance business, and how they can also benefit from better engagement on digital. There's a lot of research going around which states that, why would customers really want better experience? And I think the telling statistic is that customers who want to expand their purchases and want to buy more from you over a limited or a longer period of time will more often than not be sticking with you if the experience that you've offered has been really good. And I think the most important factor here is that a lot of the people in the industry do agree with this statistic. They are, willing to look at placing more business with carriers that offer them use the website. So I think the net is that customers will buy from you if you get the experience that they like, and they will keep coming back to you if that experience keeps getting better. So the overall benefits from engagement cannot really be overstated. And before we actually dive into some of the things that we want to cover, we wanted to give you a quick perspective into how the potential buying could happen. If an insurance buyer is looking to buy a product, there are various stages in the buying life cycle that that prospect is going to go through, and those stages, each of those stages have their own importance in the overall process of converting a prospect to a customer. So whether it is looking at addressing doubts regarding insurance, or looking at very specific information search, or looking at things like reviewing what they currently have in their insurance cover and then looking at what is lacking there, to making more pertinent observations and making more pertinent communication around the decision-making and engagement stages, where brand reputation is paramount towards sustained buying or the buying decision. And then engagement is very important in the sense of, are they really getting the information that they want after they have become a customer, and are you really in a position to give them the kind of support, information, and enable yourself to make an upsell or cross-sell in the mid to short-term periods. From a partner's perspective, and this perspective is important in the insurance business, partners and carriers need to align themselves and also influence the buying process. And again, it's the buying life cycle that basically makes these decisions for you. So if a partner or a carrier in your business is not aligned with your digital strategy, and if your digital strategy is not aligned to the buying life cycle, then there could be problems that could result in drop-offs at any of these segments, whether it's needs recognition or evaluation of options or information search or purchase decision. If your messaging, if your understanding of the motivations and pain points of potential buyers is not really reflected in the messaging that you're sending out at different stages, and your carriers and partners are not really alluding to that in their communication, then there could be a big problem, because you're going to see demand for sure, because your first segment is needs recognition, where we're looking at generating a lot of demand through search and social media, etc. But all that demand is going to be scattered at different parts of the buying process going forward, if there's a lack of understanding of pain points and the lack of mapping of messages across your channels. So whether it's direct sales or whether it's partner sales. Some of the things that we plan to cover in today's session are, it's never too early to start with customer engagement and retention. So if you are doing some programs around that, it's great. If you're considering some programs, you could have started them yesterday. So we're going to talk about a few statistics and some numbers which are very specific to the insurance industry, just to create a picture of how and why customer engagement and retention is very important, and how it can really not be put on the back burner. We'll talk about a few digital channels where customer engagement and retention can happen in a very strong way, and we'll talk about some pros and cons of the various channels that we want to discuss today. We'll talk about managing your reputation online, which is a big factor in making somebody's purchase decision more concrete. We'll talk about leveraging the data that you already have. And this data could reside in various systems and from various sources, and could be very historical in nature for every insurer. So we talk about some key takeaways that you can find from this data, and by analyzing it in the right ways. Embracing digital technologies is critical in order to pursue the path down engagement. And technologies play a big role, because once marketers and business folks are aligned that engagement is important, and they have a strategy for engagement in place, they know the channels that they want to use, and they have the right kind of data at their disposal. Combining all of this and making that into an executable program is where digital technologies come in. So they're very important in the overall context. And then finally, we'll talk about some key aspects of how multi-device approaches and integration are really driving engagement in your industry. Customers keep switching brands, and there's nothing new in that. It has happened over the years, and it will continue to happen. But the core fact is that since the past 5 years, the number of customers, or the percentage of customers switching brands, has increased sharply. And it's more than double, actually, in the past 5 years. Therefore, loyalty and the effort to retain customers is paramount. Everybody knows that. A lot of people talk about that. Marketers have in their plans and strategy meetings. But what are the numbers like? And what you see right now is basically a very eye-opening statistic in terms of what customers are really facing in some countries. So the numbers that you see here are indicative of the efforts that insurance companies are putting in right now in order to retain customers. This percentage is a factor of the overall effort that is being, the overall budget, or the overall time that is being put into customer retention strategies vis-a-vis other business strategies, and it represents a factor of what the total effort is as compared to other business efforts. And the key factor behind these percentages is that in the USA, in the insurance segment, 35% and as many as 35% of the customers are switching their insurance provider after 1 year. After 1 year of engagement, 1 year of service, they're switching their provider because they say, and I quote, that if the insurance provider were to give me an incentive for sticking on, I would not have changed. So the message here is that the loyalty incentives or the loyalty programs that insurance companies are rolling out or are yet to roll out are really not resonating with your customers. Therefore, as many as 35% are willing to change over within a year. And that is a damning statistic because what it does is that it puts paid to a lot of the effort that a lot of insurance firms are actually making in terms of retention. Obviously, something is going wrong somewhere. And then it has an impact on revenue. 80% of your future revenue will just come from 20% of the existing customers. The 80-20 rule has been followed for years, and it's just a reaffirmation of how important your current customer is to your business. And there are more numbers, and we could have actually put together a slide full of only numbers for you. But in the interest of time, some key statistics here are that 86% of customers, are quitting business with the company because of bad experience. And that number has increased by 27% in 4 years. And, in these 4 years, some of the other developments that have really come forth is that social media has acquired a new meaning altogether, and multiple devices have come into the picture. So with the advent of those two, what we are seeing is there is an increase in bad customer experience drop-offs. So while the two may not be related, but I think the message here is that the customer is much more informed and has much more flexibility in terms of making the right choice, and they are not shying away from, shedding off what's not working with them and moving on to something else. So those numbers are sufficient and more than sufficient actually to tell us that, customer retention is key. The point is, how do we go about it? What are the incentives for us really focusing on retention? And the key here is that a lot of companies that are considered best in class, and how are they achieving higher customer satisfaction? And they are, they're not doing something which is magical or something which is not doable by a lot of the other customers, by a lot of the other companies that plan to woo and retain their customers. But they are following some basics very well, and they are focused on one baseline, and which is customer loyalty, which is a result of engagement initiatives. So 75% of best-in-class companies increased their customer loyalty, and this is a key figure because an increase in customer loyalty basically translates to an increase in revenue, both in the mid to long term. So they are basically growing their business through their existing customers, and that is a huge incentive that any company can have in any vertical. Which brings us to what can a next generation insurance website or portal look like? And what are the key pillars and elements that drive this experience? We see the next generation site or portal to be engaging with your prospect and customer, empowering them and informing them. We see this portal or website as a digital platform that extends across different channels and touch points, across devices, enables engagement across the customer life cycle. So these touch points could be search, social, email, blogs, and what have you. All of these are touch points. And the devices could be desktops, laptops, tablets, smartphones, and mobile phones. So basically, we are multiplying the ways in which you are reaching your consumer or customer. And this is going to increase with time. So the concept of a digital platform is really, really critical in terms of how you look at your website. Usability and ease of use, of course, engages end users and ensures that they perceive you as easy to buy from. And that's very important. The word easy itself is very important in the overall context of things. This new website should also enable you to have a unified view of the customer. And this is critical in order to get to single views of every single prospect or customer as far as possible, which will enable you to tailor your messaging, your communication, your marketing effort, your sales effort towards that customer or prospect. We also expect the next generation insurance websites and portals to drive engagement and collaboration between and amongst their channel. And this is critical in terms of overall business growth. And we also look at these platforms to be flexible so that they keep evolving with time. They should be agile and be open to change, scalability, and increase in business with time. So how do we go about getting to a point where you can say that, look, I have a website and I have portals that are primed to drive business growth, to drive revenue growth for myself? And it's a stepwise process, but you can get there. I think the first two steps are critical. Exploring the different channels that you really want to go out on and really want to get your messaging out on. looking at collaborating more and collaborating better within your channel, leveraging the existing data that you have, looking at the key takeaways and analytics from the data that you have, embracing the right set of technologies that will enable you to execute upon your programs, and then integrating some marketing systems that you may already be using, but are not fully aware of the benefits of integrating those systems together. So those are some steps that can really drive engagement. And if you were to follow most of these steps in the way that we are trying to lay out in today's presentation in the coming slides, we believe that engagement is definitely something which is on the cards. Digital channels are increasing in terms of the options available to any marketer today. So insurance executives are planning to use social, mobile technologies in a number of ways. And while we can keep going with numbers, but the key thing here is that as many as 45% in the insurance industry have plans to deploy customer-facing mobile applications, while as many as 41% plan to use social media for brand promotion. Now these are interesting numbers because in our experience of working with a number of insurance customers over the years, what we've seen is that it's not every day that an insurance firm will jump at the opportunity of using social media. It's a regulated industry. It has a lot of ramifications for both the customer as well as the provider. And social media is promising, but it also has its own set of challenges. Therefore, to look at almost a 41% of insurance company database looking at using social media is a statistic which tells us that there is a lot of momentum in terms of using new digital channels and exploring them for better brand promotion. So while on that topic, let's talk about the social ecosystem, which is becoming very relevant. And in the previous slide, the statistic about social media was the most telling of all. So if you look at the social ecosystem, there are obviously different layers to it. There's media in which you participate, there's media that you manage, and there is media that you own. So the different layers of social media can have a big impact in terms of how you use each layer. Let's start with looking at participating. So a lot of insurance providers have gotten into social media. They're listening to what others are doing, what others are saying, and they're trying to establish reputation by making the right injunctions or coming in and participating in discussions. So it's more about content marketing, thought leadership, industry nows. It also means a lot of wherewithal in terms of experience, credentials, background of the company. A lot of those factors do come into the discussions and in terms of the content sharing that happens and the content participation that happens. In terms of managed, it's an interesting platform for a lot of insurance providers because it's here that you really come into support where customers and prospects expect you to be building more credibility for yourself on social. And that credibility will then transform into more customer recognition, into more customer loyalty in the long term. So building reputation is the key word here in the managed layer. And if you come to owned, it is here that you really want to drive your business and growth by looking at your existing customers, looking at your channel, and looking at your own business overall. So customer communities, any kinds of portals or extranets, which include a lot of your partners and channel members, and then intranets and community practices which involve your employees. Each of them have a role to play in how you can drive your business forward. So here's some key takeaways as far as we are concerned. So if you want to build your reputation online from an insurance provider's perspective, you can definitely leverage social media to engage with customers. You can look at building communities for brand positioning and customer engagement. And these communities could be just plain and simple support communities. It could be, these communities could be about talking about specific needs within specific streams of practices. So life and general and P&C, all of these are different streams and lines of business. Risk is another line of business. So there's a lot of content. There's a lot of need for communicating the right kind of content to the right kind of prospects. And this kind of engagement can help build credibility for the brand overall and influence customers' buying decisions. Becoming newsworthy on Twitter is important, but Twitter is, again, from an insurance industry perspective, Twitter is could be more of a mouthpiece about key announcements, about key developments, about any key product launches. Because of the fact that you can't use the medium for extensive content sharing, it can only be something that you can use sparingly and for immediate impact. Leveraging other media like LinkedIn and building internal communities by linking social to your marketing assets such as your website and email could be equally important, because you're trying to take traffic and trying to engage that traffic from your website or from your email campaigns through your social presence. And then you can utilize social media to connect with your partners as well. And those with slightly more evolved or mature social practices can probably look at connecting with partners through social media and extending their community on third-party platforms instead of internal platforms. While on the topic of social media, we want to make it clear that to improve upon your social practices and marketing there, you have to listen well to what is happening out there. And a selection of a good listening tool is very, very important in terms of how you want your messages to be perceived when you actually go out to social. So we would recommend strongly that if you're looking at social as a big medium, investing in a good listening tool and training your users to be able to recognize the right kind of trends from these tools is very, very important. And then you also have to invest in managing your brand online to ensure that whatever you put out, whether it's on a blog or on Twitter, reflects your brand values. A single line misspelled or miscommunicated can have a big impact in terms of reputation. So this is an important factor. If you go to social, you'll have to manage your reputation very, very carefully and ensure that you don't make the mistakes that a lot of other companies and customers have done in the past on social media, where things have happened and shouldn't have happened from a reputation perspective. The other key aspect that I touched upon as part of my introduction to today's session was partner and carrier collaboration. And some key facts here are that while your carriers are an important part of your business, they often lag behind the producer's desires in terms of online applications and digital technology. And some key tips here are that if you want to really work closely with carriers in your business, you have to train producers to use the right kind of technology. And you have to have the right functions on producer websites. Websites should be easy to use. They should be, very, very friendly in terms of how you want to drive the business forward. So all the tenets of usability, experience, and engagement that apply to your own website need to apply to your carrier website as well. And then you need to look at other additional factors, like developing a social media policy, looking at the addition of other tools such as document management, CRM, and any other customized marketing tools like analytics. So it's important to consider this piece of the business as very much something that you would drive yourself, and look at it that way, because if your partner and carrier piece is not aligned by what you are doing yourself on your own side, then there could be a big gap in terms of how you're using your channel. Some technologies that would encourage producers to place more business with carriers include online chat, support, use of multiple devices, any kind of transaction or e-commerce related facilities like e-signatures, like mobile payments, and then the use of quick quoting, the use of quick servicing of a quote, the use of quick transition from payment to product. So a lot of these applications already exist, but a number of them are now coming into being. With the use of multiple devices, for instance, it opens up several channels for you to do business on. So again, the important thing here is that these technologies would encourage more business overall between you and your carriers. And just to reaffirm what we've been saying, only 1 in about 4 producers receive and use internet leads from their carriers, but more than 1 in 2 would like to have them. So these are just to confirm the emerging trends in the industry and what we could do to harness what the potential is in terms of working better in the partner carrier channel. And when we talk about data, big data is a big term these days. It's being used and thrown about by a lot of marketers. But from an insurance perspective, what does it truly mean? Is it really a game changer? And we believe so. And we say that with good reason. And here are some reasons why we feel that this could be a really big game changer for you. A lot of the problems that marketers or business folks have in any business is around ensuring that the data is clean, it's deduplicated, it's rationalized and standardized and organized across the enterprise. And as many as 61% of CIOs and senior level decision makers in IT, in insurance firms, agree with that. And they say that this is the number 1 challenge that is facing them, and they want to address this challenge. Then looking at other factors, look like data warehouses and data marts, building on an enterprise-wide data model. And when we say that, what we mean is that if you have data aggregated and you have data standardized and present in one central repository for everybody to dip into, then it makes life easier for the marketer, for the salespeople, for your channel salespeople. They have the right kind of permissions to look up the right kind of data and make the right kind of decisions in terms of marketing or sales. And ultimately, it again has a direct impact on revenue, because data tells you a lot. It tells you a lot in terms of tailoring and fashioning how you want to sell or market yourself, and therefore it will tell you, it will give you a lot of key indicators of what you've been doing well and what you've not been doing well, and it'll also give you trends about how your customers are buying from you and how they are not buying from you. So all in all, it basically makes for a much more focused marketing and sales effort. And then there is, issues like acquiring more data from external sources, looking at additional channels or buying data, and looking at social and email also as additional channels to get data. So it's an important factor in the overall data management foundation initiatives that a lot of IT departments and insurance companies are taking. And how can you leverage this data is the other key question here. So business intelligence and predictive and analytics can provide you the right kind of data to achieve customer retention and growth. And some examples are that you can actually have a viewpoint on how you want to tailor and personalize your services. You can actually make, for instance, claim handling processes more simple for your customers. You can accurately determine what kind of premiums you need to charge, and you can reduce a lot of operational costs. So that's just an example of how you can use analytics to further customer retention. We do recognize and we understand that a lot of industry frameworks and models will remain critical as ever in the next decade. And these will continue to be the case in your industry is what we feel. And a lot of research is there to back that up. And therefore, on top of that list, and this is why it's important, is that you see that there are continued improvements in agent carrier information exchange and managing data extracted from unstructured documents. We talked about these two things in the slides previous to this, and this is more confirmation of the fact that some of these factors are critical in terms of how you want to retain customers and do a better job at marketing and selling to them. Embracing the right kind of digital technology at each stage of the process is very, very important. And this is a very, very clear and interesting visual representation of the entire digital technology suite, if you will, coming to play at different stages and key stages of your marketing and sales effort. So whether it's recruitment of agents or driving marketing campaigns or looking at underwriting requirements or claims management, you have digital technologies supporting, enabling, and empowering each of those things. User experience is key as well. We spoke about the fact that people tend to not go back to the same provider if their customer experience online or on a device has not really been up to the mark. And it's important that a lot of attention is paid to how people are transacting on your site. Is their experience seamless? Is it fast? Is it efficient? Are they getting what they want quickly? Are they able to generate the right kind of codes? Are they able to complete their journeys on your site? And these are important and basic learnings. There's nothing that is out of the world here or that people will not know of, but it's about putting these simple things into practice that can make a big difference with how you interact with your customers. And we've been talking about driving engagement, and driving engagement by improving your communication with your customers, prospects, users across different channels. And these are some good illustrations of how they have an impact on overall improvement in engagement process. So we've spoken about the fact that business intelligence is important to enable producers and carriers. We want to keep your audience informed and engaged with ongoing communication. You provide the right kind of user experience. You want to have the right kind of collateral to position your brand. And you want to also integrate your capabilities across your portal and other line of business functions. So again, by integrating of capabilities, what we mean is something which enables your agent to sell better on an agent portal or on a distribution portal should be, available to some other carrier on some other portal or some other partner trying to further your business, or on your own website or on your customer portal. So integration of capabilities is very, very important in order to have uniform impact across different lines of business and portals. And then, providing personalization, and we'll speak a bit about that in a minute. Providing more personalization and providing tools to help and manage your business from an online and digital engagement perspective. Going to multiple devices is not new. A lot of insurance providers are taking to different devices. But the important thing here is that you need to have seamless experience and seamless capabilities across the different devices that you plan to go to. So it should not be a curtailed experience or an experience that people don't want to go back to if they are accessing your website or portal from their desktops rather than their mobile phones. And the same applies to your channel partners and customers who are trying to access portals or extranet on their handhelds or on their tablets rather than their desktops. The multi-device approach is critical because the multi-device approach is something which is here to stay. It's going to get even more intense with time, and a lot of insurers do recognize the importance of this phenomenon. So they want to target and have integrated multi-channel strategies. And how you plan to do that is when you look at two things. One is there's a growth in the number of channels with social, mobile, web, emails, and how are you positioned to tackle that growth? And that happens through a phenomenon called responsive design, where we're talking about one website for all media, for all channels, for all devices. And that website needs to be uniformly seen in terms of experience, in terms of technology, and in terms of any new device that comes up. Your website should be ready for that. And there are good reasons why you need that integration, because across channels, you can do more business. And that's what the numbers say. 89% of insurers believe that it's important or critical to have cross-channel integration. And 84% of insurance consumers in North America say that it is important that products and services offered by their provider are identical across different channels available. This is a telling number because it tells you a very, very key thing that I described in the previous slide, is that people don't want to go to your website on a tablet and find that they can't do everything that they want while they can do the same things on laptop or desktop, which is critical in driving more adoption in multiple channels and therefore more business, more revenue. The other key aspect to engagement is personalization, and there's more to what meets the eye under personalization. I'll give you a live example of something that we've done for personalization and how it works. I think that will basically tell you the advantages of how this can really help your business. This is an example from one of our customers, and what we did was that this is a portal that we're talking about. This is open to a certain set of customers, and what they did was that they wanted an ability to personalize content based on the type of customer, their profile, and their requirement at this point. So we're talking about multiple variables being taken into consideration to personalize content and presentation on this portal. And what it did was that it enabled our customers in New York Live to be able to sell and market their offerings better to a certain set of select customers. How we did it was using a combination of messaging and which is content and technology. And it's a very interesting case study because it allowed real-time analytics to actually serve content to site visitors. So if I am a certain age and of a certain profile, what I will get to see will be very different from what somebody else is going to see. And there are good reasons behind that. It was done with the primary objective of driving more revenue from existing customers and enabling a superior and personalized experience so that people could spend more time on this portal. And as an outcome of personalization, what you get to is basically assembling and automating campaigns. Now, these could be marketing campaigns, these could be sales campaigns, these could be digital or offline or a combination of both. But this is an example of how you basically follow the customer life cycle in terms of being set up for the right kind of campaigns. Digital is, of course, the driver here, but you can integrate offline content and campaigns as well. And finally, we talk about a very key aspect of what engagement and retention is all about, which is understanding your technical infrastructure. And while I do not intend to go into the depths of technology here, I just quickly want to skim through and present some quick and important things here. It's important to understand, how your marketing systems are really helping you. Are they enabling you, empowering you, setting you up for success through retention and engagement, or are they just fillers on and they're not really playing the kind of marketing role that you expect them to play? So technology is important. And this illustration shows you why it's important is because all your demand, whether it's through offline or online sources, is coming into your central repository. And that repository is being fronted by your website, your landing pages, and then, beyond that, it goes into your analytics, it goes into your, if you're using an email or marketing automation tool, it goes into that. So the journey from being a prospect to being a customer, hopefully a customer, or somebody who needs, a bit more nurturing before they become a customer, is happening right in the center of this visual. And after this, what happens is that this lead goes into your CRM, either into prospect data or into customer data, and then goes into billing. So the entire journey is being supported and enabled by a certain set of marketing technology. And therefore, it's critical that you understand how this infrastructure works in your environment and how it can be gotten to do better than what it is doing right now. And one of the ways that you can actually get better is by making these systems talk to each other. And so the key systems that are really going to make a difference are your web CMS, your CRM, and your marketing automation platform, if you have one, or your email automation platform. Because these are the three technologies that have the biggest impact in terms of giving you unified view of your customers or prospects. Your CRM has customer and prospect data, your website has prospect data, and your marketing automation or email automation tool will use data from both these systems, right? So whether it's an onboarding email or an upsell or cross-sell email, your marketing automation system will take data that is already in your CMS or in your CRM to enable sending out of personalized and contextual messages. And these messages can go to somebody's mobile phone, on their tablets, or on their emails on their desktops. So we're talking about cross-channel, cross-device, and supported by the right kind of customer profiling, which is basically what the integrated view is all about. It's about behavior, historical, online, on your site, on search, taking all these behaviors and then creating a profile. And then creating a profile is probably step 2 out of 3. You need to have the right kind of content also to be able to serve to that particular profile. And you need to have the right kind of structure from a technology point of view that enables you to serve these content up at the right place, at the right time, and to the right viewer. An example of that is what you see here, is where all your messages have to be in real time. Because if you're using the right kind of technologies to create a customer profile, you want to give out the right kind of message to them at the right time. So the personas are right in the center, and you're using content, analytics, and executing on those personas. And then, of course, you need to test, review, and optimize what you're sending out, because you can never expect to get 100% or 80% success at the first go. So it's important that you look at integrating your systems and then testing and reviewing how it's working out, whether you need to make tweaks, changes, and whether you need to optimize your program further, whether there's a change in landing page, whether your content is not up to the mark, or whether you need to do better with the data sheet. So all those decisions and all those learnings can be taken once you start doing some A/B testing, looking at integrating your data, your website's data, your social data, any other data that you have, and then looking at trying to use that data better to further your messages from a marketing or sales perspective. So that was the end of the session for today. I hope that I was able to cover a few points of interest to you, some things that might be useful to you going forward, and that you might be able to take away from today's session. I'll talk a bit about eDynamic. We are a digital agency, more than 13 to 14 years in business now, with 250 customers and above globally. We are in 6 locations worldwide. We have strong presence in North America, and we do a lot of work with insurance and financial services firms, and we are a 300-person strong company focused on blending strategy, experience, and technology to enable better acquisition and engagement for our customers. And what we do is we want to transform your digital presence into revenue engines. So whether it's your website, your portal, or any other customer or prospect-facing property, we want to take that and transform that into a revenue engine for you using every offering that we have, whether it's from a demand generation perspective or customer engagement perspective. We want to speak to every stage in the customer buying life cycle and try and meet your requirements right from the start to the end. We have deep insurance industry expertise. We've been working with insurance providers for a long time now. We have a strong team and more than 11 years of experience in the space. And we've done a lot of work around websites, portals, intranets, digital marketing campaigns, multi-device and multi-channel digital strategies. And these are some of our representative solutions and customers. And that was the end of the session for today, and we'll be happy to take any questions that you have and happy to answer those.
Hi, Abraj. We do have a lot of questions, but since we're running out of time, we won't be able to take any more questions for today. But we'll get back to all the unanswered questions after the webinar via email. So at this note, we'll have to end the webinar. I would like to thank everyone for attending our webinar. We hope you found it informative. The recording for today's webinar will be available on our website within the next 3 business days. We'll also be sharing the webcast URL with all the attendees via email. Please feel free to reach out to us at contact@edynamic.net for any questions you may have. Thank you once again.